In this video, we are going to look at the larger Bitcoin cycles and discuss the topic of lengthening cycles versus the standard 4-year cycle, and if that is something that could potentially be in play this time around or not. What's up guys, Dirk here from intelligentcryptocurrency.com. If you are new to the channel, click that subscribe button below, smash the notification bell so you do get future updates. And of course, if you're not on my email list just yet and you want to get free updates, you want to get notifications whenever I upload a video, click the link in the description below, sign up for my email list, and you will get those free updates. So before we get into today's content, just a quick note about our sponsor, Prime XBT, who have sponsored the channel for the month. They call themselves a next generation trading platform that allows you to trade global financial markets using Bitcoin, USDT, USDC, and more. And it's actually even possible to trade crypto, stock indices, commodities, and Forex from just a single account. So they were established in 2018, so they've been around for a while. They currently serve clients in more than 150 different countries, and they provide top-tier liquidity and a wide range of trading tools while maintaining security, liquidity, and enabling a safe trading environment for everyone. So if you want to check them out, you can create a free account with them today. It's the first link in the description below. If you use the voucher code DIGGY50, you also get a deposit bonus. All the details are below in the terms and conditions, so check that out if you want. First link in the description below. So what we're going to be doing now is we're going to be looking at the chart at the previous cycles and also discuss the theory of the 4-year cycle versus lengthening cycles, which some people do talk about and believe is a possibility, whereas other people believe that the cycles are set to a 4-year cycle and will not lengthen or deviate. So as you might know, Bitcoin has a roughly 4-year halving cycle built in, where roughly every 4 years, the newly issued supply of Bitcoin that's being created every block gets cut in half. Now, it doesn't work exactly based on time, it works on block time. So it's roughly every 4 years in calendar time, but it's actually specifically 210,000 blocks. And because there's differences to the hash rate and the algorithm and sometimes the times at which blocks are mined, that is why there's a slight deviation in time, and it is not exactly 4 years as a calendar period. Okay, so 210,000 blocks. As you can see here on the chart, the red vertical lines are the previous 3 halvings. So when Bitcoin was launched in 2009, the Genesis block, it was 50 Bitcoin per block. A block is roughly about 10 minutes. Okay, so that can deviate a little bit, but roughly let's keep it at 10 minutes per block. So in the beginning, before this first halving, it was 50 Bitcoin that were being paid out to miners every single block, so every single 10 minutes. Then after the first halving, which was in November 2012, and this is a weekly chart, so the days are a little bit off, but it's close enough. Okay, so in late November 2012 was the first halving. That 50 Bitcoin got cut in half, and then the reward became 25 Bitcoin per block. We had the same thing in July 2016. We had the second halving. It got reduced to 12.5 Bitcoin per block. And now in May last year, in 2020, we had the third Bitcoin halving, which cut the supply in half again, the newly issued supply, to 6.25 BTC. Now, the theory is that as the newly issued supply decreases, the price has to increase to make up for that, because the costs associated with mining Bitcoin have gone up a lot. There's electricity costs, it requires stronger hardware, more powerful processors to be able to mine this. So there's a lot more costs. So the barrier to mining a Bitcoin is a lot higher. So because the reward has decreased and the barrier to mine a Bitcoin is higher, naturally the price follows. Anyway, that is in theory, and that's what's been happening so far. So as you can see on the chart, after every halving, the price has shot up. Halving, price has shot up. Halving, price has shot up. And in theory, this could continue indefinitely until the year 2100, till all the Bitcoin have been mined. Okay, so that's still a long time away. But at this point, the majority of Bitcoin have already been mined. And over the next few years, the large majority of all Bitcoin will have been mined. And then the remaining little bit will continue until roughly about the year 2140. So the theory is too, this will continue to go higher. There's also other factors, of course, like the adoption rate of Bitcoin. As that continues to grow, as more people become aware of Bitcoin, as it becomes more usable, as it gets adopted by other people and accepted by other people, more people will buy it. So that will play a role to more people wanting to buy it. It's a scarce asset, so that also helps to increase the long-term price. And then, of course, we also have the factor that fiat currencies are being printed, the debt is increasing, there's inflation. So just a Bitcoin priced in nominal terms should in the long term go way up because the value of fiat currency is going down. So all those factors together play a role why in the long run, in theory, Bitcoin should end up going a lot higher priced in fiat currency, in US dollars, in euros, in Australian dollars, in pounds, all that kind of stuff. Okay, so let's look at that. So what we have so far, and we don't have a long track record, that's what makes it difficult to actually work with anything. We've only actually really had one proper full 4-year cycle, which was the previous cycle from 2016 to 2017, because that was when we had all the altcoins and we had the ICOs and crypto was really more of a maturing market. Yes, we had the cycle in 2013, but at that point it was mainly only Bitcoin. The adoption rate, the awareness of it was completely different, right? So we're in this evolving new asset class, and even though there is similarity in cycles, every single time it is different. So we have to ask ourselves, what is going to happen? So one thing that's interesting to note, okay, so on the one hand, you have the previous cycle top peaks, okay, which was in November 2013, in December 2017. So again, we don't have a lot of data to work with, but those were the two peaks. And that basically means those were pretty much exactly 4 years apart, which lines up with the 4-year cycle between Bitcoin halvings, okay? There's roughly 4 years between them, and there was roughly 4 years between those two peaks. So the one theory is that this cycle length is not going to change, and the 4-year cycle, because it doesn't change in Bitcoin, it stays at that roughly 4-year cycle. That means that we could see a peak in the end of that 4-year cycle once again, which would be somewhere in November, December, or even January of 2022, which is this dotted vertical line that I've put here. So if we stick with the 4-year cycle, that means somewhere around probably December or January, if that 4-year cycle repeats, that would be a top. And that is still completely within the realm of possibility, because as I'm making this video right now, we still would have about 6 months left until that point. But there is also the theory that each cycle gets longer, and we're going to look at the numbers in a second, and that could result in potentially the cycle top coming in somewhere between, for example, April and July of 2022. So let's look at that in a little bit more detail. So you could see from the first halving in 2012 to the cycle top peak, that was almost exactly 1 year in length. Roughly, this was about 370 days, plus or minus a couple of days, again, because it's a weekly chart. So then if we look at the cycle from the 2016 halving to the peak in December 2017, that was about 511 days, which is roughly about 18 months. It's a year and a half compared to 12 months or about a year for the first cycle. So that leaves people to believe that maybe there's a possibility that each cycle is not going to stick to being 4 years, but is actually a lengthening cycle. So every cycle past the halving gets longer and the returns get less because the market cap gets higher, right? So here we had a very small market cap, meaning that the increase in percentage terms was much greater because it's easier to move at a smaller market cap. The bigger the market cap gets, the larger the amount of inflow needs to be to increase in that same percentage, right? So the bigger it gets, the harder it becomes to get those exponential gains. And this is something that we saw here. In terms of gain percentage, it was less in the second cycle than it was in the first cycle. And there's people speculating that this third cycle will be even less as a percentage-wise return compared to the previous cycles. So that is basically the theory behind lengthening cycles and diminishing returns. So you can see over here, this was 370 days. This was 511 days. So if you consider that this was, for example, a 38% increase in time, then projecting that forward could turn this 511 days, if the same increase happens this time, to about 705 days, which would take us somewhere between, let's just say, for example, April and July of next year, if we do have that continued lengthening cycle trend, which would basically just give us more time for the price to move higher. Now, one thing that's also very interesting to note is you can see I've created these little boxes in the price in the cycle where it seems that roughly in each past 2 cycles and right now we had a pullback in this same kind of time period. You can see over here, so we pulled back in 2013 from April to roughly about July. We had this big pullback, and in percentage wise, this is a log scale, so percentage wise that was a big drop. That was like over 70% drop over here. Then in the 2017 cycle, right, even in the middle, you can see over here from May, end of May to about July, the end of July, exactly the same time as we're going through right now, there was a pullback and there was a correction. And again, in percentage terms, this was pretty large. Okay, we can check this out. Let's have a look in percentage terms what this pullback was. This was a pullback of, you can see, just over 40%. So that is a pretty significant pullback once again. And now we started in May, it's currently middle June. It's absolutely on track with the previous cycles to have a pullback during these 2 to 3 months and then have a continuation of the cycle, just like we saw in 2013, just like we saw in 2017. And of course, we're only going to be able to tell in hindsight, but if this previous data is anything to go by, then we're looking at a continuation of the trend into the end of this year, or potentially somewhere into between April and July of next year. And you can see just a linear trend line drawn over the previous 2 tops. If we were to reach that trend line, you could see that would put us at the end of the year somewhere at around $280,000. And if we continue till April or May, potentially as high as $380,000, which are targets that still a lot of people are projecting for us to hit potentially even this year. I mean, we have Max Kaiser, we have Plan B from $100 trillion. We have Tim Draper also saying next year we're hitting $250,000 in 2022. There's a lot of people making these predictions, and this would line up perfectly with those projections in time and in price. So I hope you enjoyed this analysis. I think we are still on track for this to happen. Obviously, we'll only know in hindsight, but just looking at the data, it seems interesting. It seems like this is very much a possibility, and I guess we'll know in the next 6 to 12 months. But this is also personally what I'm leaning towards and what I'm basing my own personal investment decisions on. And I think that this bull run is not over. I think we do have further to go. And of course, like I said many times, time will tell. So if you did enjoy this video, don't forget to subscribe to the channel below. Click that notification bell if you did. Smash the like button and subscribe to my email list if you haven't done so already. I can send you updates. There's a lot of cool stuff that's going to be happening over the coming months. Upgrades to projects. There's Taproot coming to Bitcoin at the end of the year. Icon 2.0 is launching. EIP 1559 for Ethereum, big upgrade coming in the next couple months. So there is a lot of stuff that's happening over the next few months. Sign up to my email list, you'll get all those updates too. And of course, if you have any questions or you want to share your thoughts, what do you think is going to happen? Does this seem reasonable? Does this seem plausible? Leave a comment below. I do read them personally. And thanks for watching, guys. I will see you in the next video. Peace.